Hello, everybody. So, I want to take this opportunity while I'm still in Southeast Asia to discuss Southeast Asia stocks, and specifically two stocks, Sea Limited and Grad Holdings. And the question here is it secular growth? Are we talking about secular growth? So, I'm going to begin talking about the market a little bit. So, these stocks operate in a very big market. 4.25 trillion USD in GDP. You're looking at a growth rate, economic growth rate of 4.7% in that market, predicted to grow slightly to even 5%, in some countries exceeding 6%. So you're growing, kind of in line with China, if not higher than China, depending on the year. And it's a young population. Population is 31 years old. That's much younger than the rest of the world, and the population growth is predicted to be roughly flat, not grow too much in population, but not go down like China. That's one of the downsides, for example, of China, where the population is actually declining. So that's for the macro of the region. And why would I want to talk about Southeast Asia specifically? Well, it's my quest for growth, and I believe this area of the world is forgotten by American and Western investors in general. Because where do we look for growth? I'm all about trying to find the gems, and the gems may not necessarily be in the USA, even though most of them that I've found are in the USA. But sometimes you get some outliers, and sure, Brazil and Latin America is an option. As you know, I like Mercado Libre a lot on this channel, but there's some issues with currency movements and currencies. If you look at what's happening in Argentina, what's slowly happening, I guess, to the real, I see some concerns investing in Latin America, mostly on the currency front. This is not to say that Southeast Asia doesn't have similar concerns, but it seems to me like it's less pronounced. Then you have the issue of Chinese stocks, right? This is another fast growth market, but the question on Chinese stocks is, are they investable? Is this a spot where someone could invest? And, the answer for the majority of the people, at least who follow this channel, the answer to that is no. I personally don't have a problem owning a Chinese stock. It's just that I haven't found too many that are that compelling at the moment. Then you have India. India is another big growing part of the world, big growth part of the world. But the problem with India, if you ask me, is that there's giant conglomerates. For example, I was reading about this company Jio, which I'm very interested in, but you gotta buy it with Reliance, which is like one of India's biggest billionaire. You have to buy it with a Reliance group, which has a whole bunch of businesses that I don't want to be into. So you can't really parse out and just invent the high growth business. And I would argue this is kind of the same issue with Koreas and some of the Chaebiols and all that sort of stuff. So again, maybe growth markets, but nothing to find. Then you have the issue of Africa. And for Africa, all I want to say is it too early? Is it too early? And I still think it's too early to invest in Africa. Therefore, back to Southeast Asia. Southeast Asia may be the sweet spot. It could be the sweet spot. And in addition to being the sweet spot, when talking about Southeast Asia, one of the big advantages is that you get a diversified mix of governments, right? You have some monarchies, you have mostly what they call imperfect democracies. I mean, assuming there's such a thing as a perfect democracy, I don't think there is, but you have different mixes, different forms of government in this part of the world, and I think that reduces risk to focus in an area with different countries. China, you can have just a policy change and the business be gone, right? Same for Brazil, same for India. I think the fact that you operate in a region across, more than a dozen countries, I think is quite interesting. So let me move on and now talk about the stocks that I want to discuss. I'm going to begin with Grab. So I first covered Grab as a Patreon exclusive. It was a Patreon request, and I thank the Patreon who requested it. I covered it 2 months ago, almost 3 months ago actually now, and the stock is roughly flat since I covered it. It's actually down almost 2%, whatever. It's been flat-ish. So the stock has been in flat-ish trend. I think the market is waiting for the earnings, which are happening next week. But if you zoom out on Grab, you can see it's still 3 times as cheap as it used to be before we had the big, tech meltdown of late 21, early 2022. Grab was part of that SPAC meltdown, and so it was negatively impacted by that. But slowly, some of these stocks are emerging. That's the case of HIMS. If you follow HIMS, it's emerged. You'll see it's also the case of C Limited, who has been bid up and is emerging from that rut, from that valley of despair. Now, let's talk about Grab itself, Grab the business. What does Grab do? They're like Uber, with a little bit of a fintech added to it. So as you know, Uber does now Uber Eats, and they have food items. Well, Grab does the same thing with, of course, rides and eats and grocery, and they add to a bunch of stuff. And they also have like the high-end cars, and this is something that Uber, of course, got started with. And they have a finance division where they get to finance small business growth via loans, easy loans, Grab Finance. So the loan portfolio, the market is very excited about because the market thinks it's going to be very profitable. The ride business is profitable, but not as profitable as the loans. Now, of course, this is a classic of this type of business, and whenever you add a loan, it's all about the underwriting process, and are you good at underwriting that loan or not? That's the problem that Stoneco had in Brazil in the past. But right now, the loans are still a minor part of the business. The market is excited about the finance, and the market, of course, is excited about their near monopoly position on the Uber of Southeast Asia. They are the Uber of Southeast Asia. And I have a few observations about that, because you may remember my video covering the ride-share sector, and I told you in that video, I think Grab is the best play out of all of the ride-share sector, assuming one has to be in this sector. I am not in this sector, but assuming someone has to be in this sector, I think Grab is the best play. And there's many observations, many aspects of that. First of all, we got to realize that for Grab, a lot of the rides are actually a ride on the back of a scooter. And this is very common in Southeast Asia. This was done long before the internet and smartphones were a thing. So you're just taking that mom and pop business, that hailing in the street business, and you're transforming people, hailing people in the street with their scooter for a ride. You're transforming that to an app system. So you're really transitioning that business. And of course, they do cars too, but I can tell you a lot of people prefer the scooters because the scooters are about 3 times as cheap as the car rides. And another tailwind for Grab is that in a market in Indonesia right now, that's the one market, but I would argue it's the same across Southeast Asia. A lot of people simply do not own a car. Maybe they don't have the space, maybe they don't have the money, maybe life happened, whatever. But a lot of people don't own a car, mostly because it's too expensive. And for a scooter too, a scooter is expensive too. You'd be surprised, actually, the price of vehicles and scooters is not that much cheaper than the US. It's cheap, but it's not that much cheaper. So anyways, a lot of people just don't own a vehicle, so they need Grab. And this is what I anticipate is also going to happen in the US, where in Europe, where people are just not going to own a vehicle and ride share everywhere. And you're talking about Asia here, so you're also talking about a culture where food from outside is also much more common. The proverbial street food, as they call it, but eating outside, getting things delivered is much more common. If you've been to China, you know what I'm talking about. They get everything delivered there. And so, of course, this business being in Southeast Asia, they have a major tailwind on this. Another point about Grab is FSD disruption. And it's the reason why I'm hesitant I would be hesitant to touch Uber or Lyft, because I think FSD robotaxi is coming. Now, here's the thing for Southeast Asia. Tesla doesn't have a very strong presence. They, in most of the countries in Southeast Asia, are actually not present. And so they haven't collected the data in order to train an FSD computer in the Southeast Asia region. That's point number one. Point number two is, frankly, getting 10x better than a driver here is going to be much harder than getting 10x better than a driver in the US. And I don't say this to say that drivers in the US don't know how to drive. I'm just saying it's much, and this is my impression, but it's much easier to drive in the US than it is easy to drive in Indonesia. Driving in the US is easy compared to driving in all across Southeast Asia. Concepts such as, lanes and bikes coming from all sides, all of that sort of stuff. You need to be a very skilled driver. I think FSD will take longer. Make no mistake, I think FSD will come in these markets as well, but it will take longer. And so that's why the investment thesis to me is not broken just yet on the FSD fear. And that's why I like Grab, right? And the valuation is still the favorite in the sector. Considering everything, it's still my favorite valuation in the sector at a 0.41, right? Didi is a Chinese stock, so, a lot of you are going to eliminate it. Lyft is a number 2. I try to not invest in number 2s in industry. That's why it's like AMD, for example. I haven't invested in AMD. I know a lot of people love AMD, but it's number 2 in an industry, and I like to stick to the number 1. So Lyft is number 2 to Uber, so I would stick with Uber. DoorDash is kind of a separate thing, and Grab really seems like a solid play to me. So this is a stock that I'm going to be looking at, knowing that there's leaps on this stock. There are leaps for 2027. So I'm going to be looking at the leaps for 2027 on Grab. And of course, if I decide anything on this one, I'll make an update on the Patreon, knowing that I've used Grab probably a good dozen times already, and you can't do much. You can't do anything in Southeast Asia without Grab. And if you open your Uber app, I was trying to use Uber, guess what? It redirects you straight to Grab. So good for them on getting that partnership with Europe, because all of the Westerners that arrive anywhere in Southeast Asia, they get redirected to Grab, at least in a big part of Southeast Asia. So good for them for doing that. Okay, so now let me move on to the other stock that I've covered too on the channel a while back. My first video on this one was February 19, 2023. And so back then, the market was very fearful. It was in, the middle of a valley of despair. And since that video, it's been up 125%. So it seems like C is still getting, it's still in the valley of despair, but it's slowly getting out of that valley of despair. And the market is slowly realizing that they might have oversold it. Of course, it traded up to $3.50 a share. It's $1.30 right now, so it's still much cheaper than anybody who bought, let's say, between 2021 and 2022. So the stock is coming back. The stock is making a comeback. And I own C Limited. I own it. It's actually a long-term hold for me. And this is, quite frankly, part of what I consider my simple, stupid plays. I feel bad saying it like that. That's what I consider it. It's the e-commerce plays, right? You have C for Southeast Asia e-commerce. You have Amazon for USA e-commerce. And you have Mercado Libre for Latin America e-commerce. This is where I think a lot of the growth is, and on Amazon, of course, grows very fast in Europe too, so Amazon kind of includes Europe and USA. And to me, it's a very simple thesis. The mega trend that we are the surest of in the 21st century is e-commerce. And how many retailers do you see struggling? If you follow real estate, it hasn't been a good time for a lot of real estate investors and say retail, where the returns have just been, the cap rates have just been really, really bad, because these retailers and physical retail is on a secular decline. Not saying it's going to disappear entirely, but I think these businesses are going to get smaller and smaller footprint, because again, when you can get anything delivered, especially with Grab delivers stuff, for example, but C Limited also have it as a delivery network. If you can get something delivered, in a matter of 6 hours or 2 hours, all of a sudden the meaning of a convenience store entirely changes. It's really like a very urgent convenience that still remains. But otherwise, it's slowly going away. Physical retail is slowly going away because it's a 0-to-1 move. When you buy on an app, you don't have overhead, you don't have the store, you don't have to pay someone to sit in the store, and you especially don't have theft or shrink, as they call it in retail. That's one of the big driver of e-commerce. It's a slower growth megatrend. For sure, it's a slower growth megatrend, but it's not mature. And C Limited, by the way, is more than just e-commerce, or much more, depending on how you want to say it, because now all 3 divisions are back to growth. You may remember Garena. When I was covering this stock, the sadness about Garena was that Free Fire was banned in India. And so the gaming division was going down. Now the gaming division is on the up move again. And they've released a lot of mobile phone games that are picking up traction and that seem to be very popular. This is a company also that has been increasing its cash pile. I'm always careful with that. As you know on this channel, I don't like to see too much cash. But they do that because they have a financial services division, and they're trying to release some loans. And the adjusted EBITDA is $500 million. Love that, that's okay. I can't complain that they're not investing in the growth anymore. They are investing in their growth now. That was my complaint about C Limited in the past. It seems like they're back into growth mode, and I'm very happy to see that. As a summary, let me just show you the main businesses. So you have Shopee, then you have C Money. So C Money, I'm just showing you Shopee Pay, which is a part of C Money, but C Money has other divisions, but it's a fintech. So you got a fintech, you got a e-commerce website, right? And you have a gaming division and an esports division. And so these are some of the games that they either distribute out in Southeast Asia or that they developed, right? And so these games actually are extremely popular with mobile phone gamers, an area I know nothing about, but I can see that it's going up and the sales are going up. And to give you an idea of the size of this market, they have 628 million quarterly active users. So that's 2 USAs right there of quarterly active users. That's 50% bigger than all of the inhabitants of Europe who log in to one of their apps every quarter. So to me, quite outstanding. And these are the countries they operate in: Indonesia, Thailand, Singapore, Malaysia, the Philippines, and Taiwan. That's quite interesting that it's the Southeast Asia that went there. If I look at the valuation here is in line with a lot of the other stocks. It's the valuation is okay. I mean, I would say it has the best valuation. I find Shopify to be too expensive. Mercado Libre has the best valuation. C Limited has the second best valuation. Amazon is in a different category because they also have the cloud business and Amazon Web Services that's doing very well. And Coupang, to me, it's too niche of a market. I don't know enough about that market to invest in Coupang, but I like the valuation of C Limited. But we have to keep in mind that these are businesses that are still ramping, and so the rule of 40 is not achieved just yet on these stocks. So anyways, this was not financial advice. This is not investment advice. This is just entertainment. I hope you were entertained. Please like, please subscribe, please follow me on Patreon, please follow me on X, please comment. Thank you for watching, and have a wonderful, wonderful day.